Okay. We want to give exam tips. This is one of the questions, past questions that I will solve for you to help you practice in case you see such questions. It is one of the questions, one of the topics that we treated, bankruptcy. So we're going to start a question on bankruptcy. Mr. Emeka Okafor, trading as Emeka Ventures, was adjudged bankrupt on 30 June 2026. The following statement of financial position was extracted from his books immediately before the bankruptcy order. Emeka Ventures statement of financial position as at 30 June 2026. Capital and liabilities. Capital, that is in thousands, 83,500. Mortgage loan secured by a fixed legal charge on freehold land and building, 30,000. Bank loan secured by a second legal charge on freehold land and building, 18,000. Bank overdraft secured by a floating charge over the remaining business assets, 22,000. Loan secured by factory building, 25,000. Trade creditors, 20,000. Bills payable, 18,000. Accrued wages, 5,000. These are in millions anyway. Taxes payable, 6,000. Then total, 227,500,000. Then we come to assets. Freehold land and building, 60,000. Factory building, 40,000. Plant and machinery, 32,000. Motor vehicles, 18,000. Furniture and fittings, 10,000. Inventory, 28,000. Trade receivables, 24,000. Bills receivable, 12,000 or million. Cash at hand, 3 million. Cash in hand. Cash at bank, 3 million. Cash in hand, 500,000. Total, 227,500,000. Then the assets will realize as follows. Freehold land and building, 42 million. Factory building, 20 million. Plant and machinery, 12 million. Motor vehicles, 11 million. Furniture and fittings, 4 million. Inventory, 18 million. Cash at bank, 3 million. Cash in hand, 500,000. Additional information. The official receiver estimated that the assets would realize as follows. Trade receivables. I think this should have been on top. It's from copying that the whole thing jammed. So we come here, put this in here. Yeah. So this is 1 and this is 2. Okay, trade receivables of 24 million comprise good debts, 8 million, doubtful debts, 5 million, of which only 60% is expected to be recovered. The balance is considered bad. 3, bills receivable amounting to 12 million comprises bills in hand, 8 million, expected to be realized in full. Bills discounted with the bank, 4 million naira. Before the bankruptcy order, acceptors had honored 1.5 million of the discounted bills. The official receiver expects only 50% of the remaining discounted bills to be recovered. 4, the mortgage loan is secured by a first legal charge on the freehold land and building. 5, the bank loan is secured by a second legal charge on the same property. 6, The loan of 25 million is specifically secured by the factory building. 7. The bank overdraft is secured by a floating charge over all the remaining business assets. 8. Estimated legal and bankruptcy expenses amount to 3 million naira. 9. Of the accrued wages, 2 million naira rank as preferential creditors. 10. Of the taxes payable, 1.5 million are preferential. 11. A contingent liability of 5 million naira exists in respect of a guarantee given on behalf of another trader. The official receiver expects only 2 million to crystallize. 12. The proprietor owns a life assurance policy with a surrender value of 6 million naira, which is available to the estate. Required 1. Prepare the statement of affairs clearly showing this will go off. Prepare the statement of affairs. B. Prepare the deficiency account. And C. Calculate the estimated dividend payable to unsecured creditors. Okay, so this is the question. We are going to go over to the solution. The solution has been prepared. I will explain it. Okay, Emeka Ventures, that's the solution. Emeka Ventures statement of affairs as at 30th June 2026. So we rule the statement of affairs line, gross liabilities, and this is another sign for working, estimated to rank. Let me estimated to rank. Then assets, the other side, another naira sign, estimated to realize. So we are going to compute the unsecured creditors. Okay, this is the unsecured creditors. This is the way we got the unsecured creditors. Trade receivables of 20,000 is unsecured. Bills payable of 18,000 is unsecured. Then accrued wages. I think accrued wages is uh, accrued wages is 5,000. Let me check the question. Yeah, accrued wages is 5,000, but they said that 2 million, so it's 5 million. They said 2 million will rank as preferential creditors of the accrued wages. So what it means is that the remaining 3,000 will rank as unsecured creditors. Then we also have accrued tax, which was 6 million. And they said 1.5 million will rank as preferential creditors. So the remaining 4.5 will rank as unsecured creditors. So if you add it up, you have 45,500,000. So that's what we have here, unsecured creditors. So we come to secured creditors. The first security, let's look at what it is. That's the mortgage loan. Mortgage loan, 30,000, and is secured by a first legal charge on freehold land and building. A first legal charge on freehold land and building. And then the freehold land and building, which is the security, is going to yield 42,000. That's what we're going to realize. This is mortgage loan. I can change it to mortgage loan. Then I can change the security or I'll just put it land and building. Okay, land and building. Let me expand it. Land and building. Let me confirm that it is land and building. Okay, freehold land and building. Yeah, freehold land and building. That's the security of it. Okay, let's go ahead. So that is the security. And then if you pay off this mortgage loan from the proceeds from the security, you have a surplus of 12,000 naira. And then this land and building has a second mortgage, according to the question, which is bank loan secured by a second legal charge on freehold land and building, 18,000. So we bring it here, partly secured creditors. This is that's bank loan. This one is, let me put bank loan, bank loan. Okay, bank loan 18,000. Bank loan 18,000. 18,000. Then we transfer the surplus to it because that is where it has the second charge, 12,000. Now, the 12,000 will not be able to pay the 18,000. So we are going to rank, the balance is going to rank for dividend. So we have 6,000. That is 18 minus 12, 6,000. So that one will rank for dividend. It has turned to unsecured creditors. Then there is another partly secured loan again. Let's look at what it is. Bank overdraft. Loan, not bank overdraft. Loan secured by factory building, 25,000. Loan secured by factory building, 25,000. That is the partly secured loan that you are seeing here. Then uh, the factory building is to yield to realize 20,000. It's estimated to realize 20,000. And that 20,000 will not be able to settle the credits, the loan. So the remaining amount will rank. That's 5,000 will rank. Then the next one, we are going to consider the contingent liability. According to the question, it said a contingent liability of 5 billion exists in respect of a guarantee given on behalf of another trader. The official receiver expects only 2 million to crystallize. So we come here and this is 5,000. So sorry, there is a mistake here in the solving. Is 2 million that will crystallize. So what will rank is 3,000, 3 million. This will change when I get to that place, I'll correct it. So what will rank is 3 million, not 2 million, because what is there is 5 million and what will crystallize is 2 million. So it means that 3 million will be unsecured because it will rank. Then we come here after the whole thing. The next thing is the bank overdraft. That is a floating charge on all the assets. So this will actually be deducted from all the assets when the assets have been realized and there is something that is remaining. So that is why I brought it here. though uh, it's going to be a charge after the preferential creditors has been settled and the liquidators' expenses have been settled before we consider the overdraft. So we bring it in here. Uh, it's not going to rank. It's only when we don't have enough assets realized to settle it that it will rank. But if we have enough assets to settle it, it will not rank because it is fully secured on all the assets of the company. So it's going to take preeminence over unsecured creditors. As long as there is something left in the asset, you consider that first, except there is nothing left. So that is why it is there. Then liquidators expense, 3 million. Of course, that one will come. And then the preferential creditors that we calculated here, that 2 million and the 1.5 billion. Sorry, my computer is hanging. Let me go to the question. The 2 million and 1.5 billion, that's it. The taxes payable, 1.5 billion. Wages, 2 million rank as preferential. So when you add it, that is 3.5 million. So if you put them together, both the preferential, both the liquidator expense and preferential creditors will add them up to net them off in the statement of financial position. Sorry, to net them off in this asset realized. Okay, so that is on the liability side. So we go to the asset side. We are going to realize the assets on liquidity basis. So we start with cash at hand, 5 million. Sorry, that should be something like this to show that it's a million. All the assets are in million, in thousand, sorry. Okay, let me add them. Okay, so we also have cash at bank, 300,000. Inventory, the gross amount is 28,000 to realize 18,000. Then we have the trade receivables, goods, 8,000 to realize 8,000. Doubtful, 5,000 to realize 60%, that's 3,000. Then the remaining one is bad, that is 11 million. Then bills on hand to realize in hand 8,000. Bills reserved in hand 8,000. So 8 million, sorry. Don't mind my thousand, it's a million. Then 8 million to realize the full amount. That's what the question specified. Then discounted, they said we have 40, which 50% of it is going to be realized. The rest will not be realized. But in the 4 million, they have already discounted 1.5, which has come through. So the remaining 2.5 is what we're going to divide into two to have this 1,250,000. Listen again, in the 4 million, according to the question, let me go to the question and say exactly what the question said. Bills receivable amounting to 12 million, comprise bills in hand, 8 million, expected to realize in full. Bills discounted with the bank, 4 million. This is what is discounted with the bank before the bankruptcy order. Acceptors had honored 1.5 billion of the discounted bills. The official receiver expects only 50% of the remaining discounted bills to be recovered. Now, the 4 million, they have already paid out 1.5 million, which the receiver can no longer access. So what they can only access is 2.5 million, that is 4.5 minus, 4 million minus 1.5, that is 2.5 million. And out of that 2.5 million, it says the only recoverable amount there is half. So this is half of 2.5 million. Then the rest is bad. Then furniture and fitting, we have 10 million gross, but to realize 4 million. Motor vehicles, 18 million to realize 11 million. Plant and machinery, 32 million to realize 12 million. Life insurance, the additional note that said the bankrupt person has 6 million naira worth life assurance. We also have to bring it in. So it's going to realize the whole amount. So we come here and say, less preferential and liquidators expense, which is this amount here. So we remove it to have 68,250. Then floating charge. This now, after everything, what is left, you are going to pay the floating charge first. That loan that is secured on all the assets. I have floating charge on all the assets. That is, let me read it. The bank overdraft is secured by a floating charge over all the remaining business assets. And that bank overdraft is 22,000. So since we have enough asset to settle it, we have to pay them first. They are not going to rank as unsecured creditors because they are secured on the whole asset of the business. Now, available to unsecured is 46,250 naira. So because of that adjustment I made here, the deficiency account balance will change to 13. Yeah. Okay, so our statement of affairs have balanced. So let's explain this deficiency account by opening, this deficiency by opening a deficiency account. So in the deficiency account, let's change it to 13. And then that contingent liability, what is the deficient? It's 3. So that will balance the account. So we have capital. It's in the equation 83,500. You debit the deficiency account with all that will reduce the efficiency. That is like an income to us. Then life assurance. That life assurance that they said the man took, we are going to bring it in here. And then we bring down the efficiency account. So we go to the credit side. We will start by paying off the liquidator's expense, which is 3,000. Then we now look at all the things all the losses we made from asset realization. We have bad debts, 13,000. Of course, I showed it here. This 2,000, 11,000 plus 2,000 here. This is 5,000, realized only 3,000. So 2 is gone. So we have 13,000 from bad debts. Then bills receivables, we have 2,000, 2,750,000. So that will be this minus this to get 2,750,000. That's what we did not recover. Then inventory. Inventory was how much was inventory? 28 million. We recovered 18 million. So 10 million is lost. Freehold land. was 60 million. We recovered 42 million. This is unrecoverable. Then factory building was 40 million. We recovered only 20. So 20 is unrecoverable. Plant and machinery was, let me check what it was. Plant and machinery, 32 million, and we recovered 12 million. So the deficiency there is 20 million. The same goes to motor vehicles. We recovered less, and the deficiency is 7 million. Furniture and fitting, the deficiency is 6 million. Then the contingent liabilities that we recognize, the deficiency. Where did it stop talking? Is it long? Because I'm always already done. It's not. You're finished, like. No, I've not cut it off. Okay, because of the mic problem, go and check. Because of the mic problem, let me explain the deficiency account again very fast. So we want to explain this 13,250,000. So we have a deficiency account. We're going to bring down the capital as receipt. These are the things that will reduce the deficiency. 83,500,000. That is the capital. It's in the question. Life assurance, the 6 million life assurance that the man has, the bankrupt person, and then we bring down the deficiency account. We go to the other side. First, we need to settle the liquidator, his expenses. Then the bad debts is one of the things that caused the deficiency. This is the bad debt, 11 million plus 2 million that is here. This is 5 million. We realized only 3 million. That means 2 million is unrealized. That is deficiency. So you add it, that is 13 million. The same goes to bills receivables. The bills receivables, we realize uh, this amounts 9,250,000. If you less it from 12,000, we have 2,750,000. Inventory was how much was it? About 28 million. We realized 18 million. 10 million is loss. So 10 million is deficiency. Freehold building was 60,000. We realized 42,000. 18 million is deficiency. Factory building was 40,000. We realized 20,000. 20,000 is deficiency. Plant and machinery was 32,000. We realized 12,000. 20,000 is deficiency. The same goes to motor vehicles, 7,000 is deficiency. Uh, Furniture and fitting, 6,000 is deficiency. Then the contingent liability, which we saw that 2,000 was recovered, 3,000 is deficiency. So this balances the deficiency account. Then we're also told to calculate the dividend payable to unsecured creditors per naira. The total unsecured creditors is 59,500,000, while the amount available to them is 46,250,000. So you come here and do 46,250,000 divided by 59,500. So you have 0.790598, which is 79.06 kobo per naira. So for every unsecured creditor, for every 1 naira they owe unsecured creditor, you pay that person 79 naira, 79 kobo, 79.06 kobo. That's what they will pay per naira. So if they are owing him 50,000, it will be multiplied by this to see how much they will pay him. So this is the solution to the bankruptcy question. I am sure that if you listen carefully, if you go through it and listen carefully, you will enjoy it and you will understand it. When you come across this kind of question in exam, it will not challenge you. You'll be able to handle it. Thank you very much. I have done this. You should go ahead and study. Subscribe if you have not subscribed. Like, share, and comment. If you have any question, please don't hesitate to ask. I will check it often to answer, to respond to every question. Thank you very much.